Good morning. Equity markets in India are more or less flat at the start of trade on Tuesday, and it's flat with a marginally positive bias. The context is that overnight you had the US equity markets do quite well for themselves, and this is on account of the Pfizer BionTech vaccine that got the US FDA approval. And what that means is that a lot of companies that have so far been holding back from making a vaccine shot compulsory for employees in the US could go ahead and do just that. So it's a shot in the arm literally for the vaccination efforts there. So what could happen is that the expectation is that economic activity in that country will improve significantly. So you have crude prices go up, metals have rebounded. Here in India as well, you have metal counters that are rebounding, doing quite well for themselves. But first I'll tell you about the benchmark indices. They're flat, like I said, so the Nifty 50 unchanged, currently hovering around the 16,500 mark. You have the small cap and the mid cap index after underperforming significantly in the recent past. The mid cap index gaining about 0.4%, small cap index up as much as 0.3%. Among the top performers on the Nifty 50, you have Hindalco and Tata Steel. Hindalco gaining as much as 3% and Tata Steel as much as 2.8%. Remember, Tata Steel has underperformed significantly in the recent past, so this is a bounce back. Coal India, Tech Mahindra, IOC, ONGC, NTPC, BPCL, all stocks that are doing well. Bajaj Finserv also gaining over 1%, so is Ultratech Cement. JWC Steel close to 0.9% higher. Among the losers, you have the likes of Kotak Mahindra Bank, that is the biggest loser on the Nifty 50, down as much as 1.2%, Asian Paints over 1%, and then you have Maruti Suzuki, which is down about 0.4%, which is on the back of the order from the Competition Commission of India, which imposed a 200 crore penalty for anti-competitive behavior over discounts offered by dealerships. Apart from that, you have GAIL India that is active in trade. It gained significantly, in fact over 5%, and then it cooled off just a tad bit on account of the significant buying volume, which was at 3.11 million shares. That's double the 20-day average. And in fact, analysts had 35 buy and 2 hold recommendations. So it's broadly considered to be a buy at these levels, and that's why it's looking positive. Broadly, I would say among the sectoral indices, if you take a look, it's not looking spectacular and it's not a universal recovery from what we've seen over the past few days. There is still a little bit of selling pressure that is being contended with, but the Nifty Bank is flat, about 0.1% higher. Auto is down about 0.2% on account of the pressure that is being felt by Hero MotoCorp as well as Maruti Suzuki. You have FMCG as a pack that is down about 0.4%. Metals, which is higher by 2.2%, so that is the clear winner, and IT is about 0.2% higher, more or less holding on to the gains that it has made over the recent past, particularly the large cap IT names doing incredibly well in the recent past. So that's what you have to bear in mind. Globally, markets are going to be holding their breath to a certain extent till the Jackson Hole Symposium and till Federal Reserve Chair Jerome Powell makes a statement or addresses the Jackson Hole Symposium. That will happen only on Friday, remember. So you could see a bit of a range-bound move for international markets, particularly the US, till that time. And here in India, you could see continued selling pressure, but we'll have to wait and see how that pans out over the course of this week.